Hello, welcome to the Job Walk Podcast, an interview-styled mobile podcast where we go out into the field where the professionals are and share helpful information on buying, selling, remodeling, designing, or building your home. So join us for a job walk. Good morning. We're here with Michael Jocobo with Berkshire Hathaway to get our monthly update for the month of August. But before we start, Michael, if you could just tell us really quickly where people can reach you, your website, that would be very helpful.
Yes, absolutely. Hello. My name is Michael Jocobo. I'm with Berkshire Hathaway Home Services, California Properties here in Carlsbad, California. And we're going to talk about San Diego County numbers today. Where they could reach me is jacoborealtygroup.com. Jacobo is my last name, jacoborealtygroup.com.
Great. So let's go ahead and jump into the market update. Everybody, I'm sure, is curious to find out. It was just about a month ago when we went over some information that you look at on a regular basis to kind of gauge where we are in the market. So let's just go ahead and start there.
Right. So here in San Diego County, this is active as of August 26th, which is today, time that we're doing this podcast. As of right now, we have in San Diego County 4,871 homes. That is up from the previous months. Still low, in my opinion, if you're looking at the overall picture. A healthy market, we're probably around 6,000 homes, so we're at 4,871 right now. Of those 4,871, we have 2,704 that are pending, and we have closed just over 1,800 homes for this month of August. Good amount. What that means? So that's giving us an average pending period. So in other words, taking from the time a home goes active to when the home goes into escrow, our market time, it's rising. It's now at 41 days. Okay, which is pretty high, but that's okay. Our inventory is also, we're right around 2.2 months worth of inventory, where just a couple of months ago we were still hovering right around 1.5 months, and a few months back further we were less than that, right around 1 month.
So that's really starting to build then. That's a big change in the market.
Yeah, we're definitely seeing more inventory coming. It's just taking longer. Home prices are starting to soften, we're seeing, but there's still buyers out there, and homes are still moving.
So let's talk about the impact it has on the market from the buyer's perspective when the inventory starts to grow. You know, what are you seeing? How does that higher inventory number relate to the actual deals that are transpiring today?
I would say the biggest change that we have seen, and this is boots on the ground, something that I'm doing every day, showing property myself to buyers. But what I'm seeing from what we saw just earlier the first quarter of this year, for example, to what we're seeing today, is that now buyers have more choices. And when there's more choices out there, buyers can be a little bit more pickier. And now we're starting to see negotiations actually coming back. And that's the great thing about real estate, is now it's not just, hey, the seller's put a number out there and the highest bidder is going to get wins the property. Now there's actually negotiations occurring, whether that be about the price, whether that be the escrow period, or whether that be over contingencies. All of those were a lot different in the first quarter of this year to where they are now.
And that's a direct result of supply and demand, basically, right? You have more supply and the demand changes. On the offers that you're writing or the offers that you're seeing, are you seeing more financing and less cash purchases? Is that one of the negotiation points that are sort of starting to come back? I know there was a lot of cash in the market when the market was had the lower inventories. So are buyers that have to get traditional financing more competitive now?
I am actually seeing less cash offers coming out right now. Conventional financing is normal, but I am still seeing quite a bit of down payment. I just recently closed one this week where the client put down 70%. that's a lot of money down.
Right.
On $1.5 million, it's a lot of money down. So, most people are still putting down 25, 30% though. I'm seeing that across the board, no matter the price point.
And are we looking at longer escrow? And I'm just comparing these things to, a few months ago where we were, I think we were talking that you were seeing 7-day closes, 14-day closes to be competitive as a buyer.
Right.
So are we back to 30-day escrow time periods?
Yeah, I would say we are definitely back to 30 days unless it's a cash buyer. And I'm not saying that they're not out there. I just think that there's less of them. I am seeing as quick as a 21-day close with a conventional financing purchaser, 21 days, but typically 30 days. That's normal.
That's a good thing, right? That will bring more buyers back into the market, correct?
I believe so.
Yeah. And then let's talk about the actual offers that you're seeing, and then some of the things that you're actually negotiating for the buyers or having to discuss with the sellers. I know earlier we were talking and you just mentioned it's definitely a little bit more difficult to get the deals together and then getting them closed. So let's talk a little bit about some of those transactions that you're seeing and how they're going.
I think the difficulty comes from more of the financing part of it. And then as far as just the transactions themselves, what you're finding now is also just the negotiations of one major thing, the request for repairs. Requests for repairs were almost a moot point a few months ago. Sellers were selling homes in an as-is present condition. Well, today, again, now that the buyer has a little bit more, I wouldn't say they have the upper hand, but I think they have an equal part into the transaction where the buyers can now tell the sellers, hey, we want X, Y, and Z fixed prior to the close of escrow, or we'll take a credit in lieu of those items being fixed. Those are the negotiations that I'm finding happening more and more now, and getting those items fixed within the time frame given in order to close on time. And because there's little people, not very many people out there that are able to just jump on a project and get items fixed, it is becoming a little difficult in that term. But I'll talk about what I said earlier, and that's really more of the financing part of it that is delaying things. I'm in a transaction right now that we're going to be nearly 30 days behind. Oh, wow. And mainly because of this particular purchaser hasn't purchased a home since 2005. And if you recall, in 2005, it was a lot easier to get a loan than it is today. And so she doesn't know the processes today, what there are, and the loops you have to go through, jump through just to get an approval. So, this particular buyer, she just wasn't in the position, I don't think, to be ready to purchase a home. So we're kind of working backwards to get this deal done. It's just taking a little bit longer than anticipated.
So let's talk a little bit about, home inspections are interesting. This is kind of off the market update, but still I think sounds like it's really relevant. Home inspections, years ago were done and, just to give people sort of a look-see at what they're buying, right?
A peace of mind.
A peace of mind. The expectation wasn't necessarily there that everything had to be fixed. But that's a thing now, right? Like this has become a part of a transaction and the expectation. So you get it in escrow, that's one hurdle, right? And then the second big hurdle is the home inspection. Is that right? I mean, is that how it feels? Because that's how it sounds.
So true. And the funny part is what people who may be listening to this outside of the state of California, our purchase agreement, our contract here for the state of California says right on there that the homes in California here are sold in their as-is present condition. So just for the listeners out there, the sellers aren't obligated to have to fix anything. Right. But it's also, it's something good for the sellers to do, a little something for the buyers, so everybody feels warm and fuzzy, and everyone moves forward to close escrow. But it is becoming more of a norm. I see it all the time now.
And I mean, I've had this in my own experience. Like, people kind of get offended, right? I mean, there's a whole emotional thing to this.
You're asking for what? You're asking me to fix what?
Right. So how do you set? Because it seems a little bit like it's out of control to a certain extent, and I don't know how it became the thing that it is. But how do you set the expectations for buyers who are going to get a home inspection report? And then how do you set the expectation for the seller who is going to receive it? And how do you sort of, without a bunch of harm and bad will happening over this report, how do you set the tone for that? That's
a great question. And depending on, like what you said, depends on what hat I'm wearing. If I'm representing the buyer, I let the buyer know. Just so you know, this inspection is more for you just to know what you're getting into. The sellers aren't going to be required. It's the verbiage that I use. It's very important here. But the sellers aren't required to fix anything. My recommendation is, if there's something that's really, hits home to you, that you feel like it really needs to be done, or you may walk away because of it, then I suggest we do ask for that. We do ask for those items to be fixed prior to the close of escrow. So I just kind of give them that expectation up front, that the sellers are not required to do anything. Now, on the flip side, if I'm representing the seller, I let them know, hey, Mr. and Mrs. Seller, the buyers have the right to do a home inspection. Most likely, they're going to ask us to do some repairs. Okay, so let's just be aware of that going into it. No home is perfect. As much as I want to tell them your home is lovely and everything is, they think that everything's perfect, trust me, even new home construction properties, there's things that need to be fixed. So I kind of just lead them into that. And what I also tell my sellers is that this is one obstacle that we need to get over the hurdle to move to the next step of closing. We may have to fix a few items, or in lieu of fixing items, provide the buyer with a credit at the close of escrow.
So it's interesting how the markets change, like you said earlier. Before the home inspections, people weren't even doing home inspections, right? Some people were just waiving their right to a home inspection.
Yeah, to get the house.
But this is the impact of that higher inventory.
Right.
Another impact of the higher inventory is the prices softening, like you said earlier. So let's talk a little bit about what you're seeing in terms of, the prices. Is there... Obviously, there's probably more negotiation in terms of what a seller might expect to see in an offer versus the list price. But can we talk a little bit about that? And then, are you seeing people get, 96% of their asking price? Is there some kind of a calculation there, or is it just really transaction by transaction, offer by offer?
I think it's more specific to the areas as well, not just by offer, but more specific areas you're still seeing properties go above asking price. You're seeing multiple offers. You're also, in other areas, you're seeing homes, a lot of price reductions, and it's very important to have a professional realtor, real estate agent sit down with the sellers to really have them understand what true value is. And what I mean by that is the sellers look at the overinflated prices that were in February, March, and April of this year. And they see that number and they think, wow, well, my house is nicer than that house down the street that sold for X. We want X plus, right, for ours. We believe it's worth it. It's really, really important to tell or to explain to sellers where the values are today, August. Because those overinflated prices are no longer the true market value where we are today. And you see that in a lot of price reductions. You're seeing that in offers being written on homes that are priced too high. And In some places, I've seen already 20, 30% come down. Now, it was 20 and 30% where it was overinflated to begin with. So, but if you look year over year, there's still a 10% yield. There's still 10% that they've from last year to this year as far as what they've gone up in value. What I'm talking about is just that those few months where literally homes were selling. You were listing it. I had one property here in San Marcos where we listed it for 1.4 and it sold for 1,625. That's $225,000 over asking price. That is an inflated number that doesn't really translate to what the market is really doing or where the values are.
Right.
Does that make sense?
Yeah. So really what we're seeing in the inventory rising is a stabilization of the market. It's not necessarily it's collapsing or anything. It's just stabilizing.
I would say that to be 100% true and correct. We're not seeing it collapse. We are seeing it stabilize. We are seeing, again, those home prices, like I mentioned, the one in San Marcos, probably that house, if it were to come on the market today, it would probably still sell at 1.4 where it should have sold originally, right. Not the 1,625.
And then also on the lines of, I'm getting the message that the inventory really controls so much of these things. The people that are putting their homes on the market, who are they? Are they a specific group of people? Are they people moving out of state? Do you know? Are they downsizing? Do you have any kind of a feel for this rise in inventory? Is it people that were on the fence? Is it flippers? What are you seeing in the inventory as you're looking at it?
I see a little bit of everything that you just mentioned. And you have some of the people that are putting their home on the market that they have a fear that they may have missed the top, right? So you're seeing those people put the home on their market now. Here in San Diego County, we're always going to have an influx of people moving in and people moving out. A lot of corporate relocation, which I do a lot of. So I'm very familiar with that aspect of it. Then you're seeing people where people have just been moving out of California, and you're still seeing that, where people are still moving out of California and deciding to go elsewhere and live out of the state, and that's fine. So it's a little bit of everything. I also do see the people that are still upsizing, still outgrowing their current home and feel that the market is great and the interest rates are still really good. Being in the mid to low fives, it's not bad. And so they may be upsizing or some downsizing.
So our takeaways for today, we're going to wrap this up, are just, it's very similar to last month. It's gone up a little, down a little, nothing outrageous.
Right. Obviously our inventory is slowly rising. But that's also indicative of the time of the year. As you will know, our fourth quarter was typically the slower time of the year. People tend to not put their home on the market just due to that fact alone.
Fantastic. Thanks for the update. And then you want to just tell people where to get a hold of you?
Of course. Yeah, if they could, if they have any questions, you guys are more than welcome to reach out to me, Michael Jocobo, and that's at jacoborealtygroup.com. You can also reach me on my cell phone directly at area code 760-445-0060. And I'd be happy to help you in any way I can.
Great. Thanks, Michael.
Thanks, Barbie. Pleasure.